Bitcoin just smashed his all-time high, almost $112,000. Ethereum skyrocketed 20% to $2,700 in a single day. Tariffs with Britain remain at 10% instead of the promised 50%. But while everyone is shouting about victory and expecting even more growth, something completely different is happening behind the scenes. While smart money players quietly preparing for a shock, we are either witnessing the beginning of financial revolution or a brutal reckoning awaits us all. In this video, I'll reveal what's really hiding behind the market explosion. Why did Ethereum suddenly shot up 20%? This isn't random, it's a prelude to what smart money has been planning for months. While everyone's eyes are glued to Bitcoin, the real drama is unfolding in the shadows. I'll expose the fat secret game disguised as a pause and explain why Trump's trade deal isn't just political theater. It's the key to understanding where the market is really headed. Spoiler, it's a path to $130,000. But not the way everyone expects. But before we dive in these market secrets that could change everything you know about crypto, do yourself a favor. Smash the subscribe button right now. What I'm about to share could be the difference between massive gains and devastating losses in your portfolio. Hit that notification bell because missing this information could cost you dearly. Ready? My name is Sabaq, and let's expose what's really happening behind these explosive market moves. Look at that chart closely. Yes, we are about $100,000, but look at what just happened. We just broke through the upper boundary of the price channel, which sat in the $99,000 to $100,000 range. And you know what was in that zone? The maximum trading volume. Now pay attention here, the key point. After such an impulsive breakout with no pullback, we need a correction. The first potential pullback level is here, exactly where the upper boundary of the channel was, around $99,000 to $100,000. The next correction target is the lower boundary of the channel at $94,500. But here is what everyone is missing. While Bitcoin broke through 104K, the last time it was at 100,000, Ethereum was 40% higher than it is now, and Solana was 15% higher. That means one thing. Most altcoins are still significantly lagging behind, with a few rare exceptions like Pepe and Ethereum's latest jump. Speaking of which, did you catch Ethereum's move? It exploded 20% in a single day, climbing above $2,300. That's the biggest daily rally since 2021. Over the past months, ETH has gained an incredible 60%, from $1,500 to $2,700. And this comes after a major drop from $4,000. Solana isn't far behind. Although the movement is slower, the trend is changing. Sol is trying to recover after a 3-month decline, and long-term holders are beginning to accumulate positions. So why are other cryptocurrencies performing much worse at a higher Bitcoin price than before? I'll tell you right now. This is not a coincidence. Trump just signed his first trade deal with the United Kingdom. And you know why? Remember how he threatened everyone with giant tariffs, 20, 30, 40, even 50%? The big game, America will be great again, and all that rhetoric, and the result? Tariffs for Britain remained exactly the same, 10%. The same 10%. The whole circus ends in nothing. And here is the twist, the market is reacting positively. Why? Because everyone expected much worse. Trump flexed his muscle, but the actual results were softer than anyone anticipated. And now investors are betting that deals with other countries will follow the same pattern. Just look at what happened with the US and China. Honestly, I bought popcorn expecting an epic trade war, but I barely finished the first bag before it fizzled out. The US agreed with China to reduce tariffs for 90 days, from 145% down to 30%, while China dropped from 125% to just 10%. That's a colossal improvement in trade relations that nobody saw coming. But everyone is forgetting the real goal of this maneuver. The US has a huge national debt and high interest rates. 4.5% for them is like 20% for us. They desperately need refinancing at low rates, and for that the Fed needs to cut rates and fire up the printing press. All this Trump toughness is just a pressure tool. But here is the kicker, the Fed isn't ready to dance to Trump's tune. He is clearly losing patience with Jerome Powell, who hasn't exactly pleased any of us so far. A Fed chair replacement could be coming sooner than we think. Let me break down the 3 main bombshells from the last Fed meeting. First, tariffs are still significantly higher than expected. Second, If the tariffs raise continues, we'll see rising inflation and unemployment. Third, the Fed might delay rate cuts until 2026. Did you catch it? 2026, and somehow the market is celebrating. It is complete madness or brilliant manipulation. And now another bombshell just dropped. Fresh inflation data came out. Expectations were 2.4%, but the actual result was 2.3%. This means the US is inching closer to the Fed's 2% target, which theoretically opens the door to rate cuts. But the Fed remains suspiciously silent. The market interprets this as a temporary pause, but watch closely. If financial stress begins to appear, the Fed might suddenly step in. Now the most important part. A fundamental shift is happening in crypto before our eyes. Bitcoin is starting to move independently of traditional markets. This decoupling is happening for three powerful reasons. First, foreign investors are massively selling American stocks due to tariffs. 30% of the US stock market is owned by foreigners, and they are selling in protest. Second, large companies are buying Bitcoin at an unprecedented rate. In April alone, Strategy bought 27,000 BTC for nearly $2.4 billion. The total volume of corporate purchases was nearly 100,000 Bitcoin in a single month. That's $9 billion flowing into Bitcoin in just 30 days. And third, investors are increasingly viewing Bitcoin as digital gold. Tariffs don't affect it, wars don't affect it, pandemics don't affect it. It's completely decentralized. Now look at this strange anomaly. Both gold and the S&P 500 are at all-time highs simultaneously. This almost never happens. Historically, when there is instability, gold goes up. When things are calm, the stock market rises. But now both are surging together. They are driven by completely different forces. The stock market is fueled by institutionals and retail investors, especially big tech. The S&P 500's growth is powered by just 7 major companies. Meanwhile, gold is rising due to governments. China, Turkey, Russia, they are accumulating it aggressively as a hedge against the dollar. And here is the shocking fact. Retail investors are almost gone from Bitcoin. Of the 21 million total supply, only about 12 to 14 million are actually circulating and just a tiny fraction is held by regular investors. The rest is in the hands of whales, funds and structures like BlackRock. Bitcoin has already been taken from retail, and now the same process is happening with Ethereum. In 2025 alone, 250,000 Bitcoins have already been sold, mostly at a loss. Who bought them? Come on, admit it. Do I have any funds, governments or big players watching my channel? Leave a comment, okay? And who sold them? Ordinary market participants, mostly retail investors who simply couldn't hold on through the volatility. This confirms decoupling in action. Cryptocurrencies no longer dance to the Fed's tune. They are charting their own course now. By the way, on May 7th, 2 critical events revealed the market's true face. First, Ethereum launched the backtrap rate and exploded 20% in a single day. This isn't just a technical update, it's a preparation for institutional entry. Now it's possible to stake more than 32 ETH. This creates the essential infrastructure for big players. Ethereum is being readied for institutionalization, following Bitcoin's path, and this connects directly to BlackRock's recent moves. Latter thing, the company's CEO recently met with the C-specially to discuss Ethereum staking. This is a clear signal that Ethereum will be the next institutionally promoted asset. Second, for the third consecutive time, the Fed kept the rate at 4.25 to 4.5%. Paul carefully stated, there are scenarios with cuts and scenarios without. It all depends on tariffs. Another powerful indicator, USDT dominance, has started to fall. This means money is returning to the crypto market. The last time this happened was at the end of 2024. And back then, altcoins gained 200 to 400%. Now we are waiting for further decline in dominance, down to 53%. If that level breaks, alt season will be extremely strong. And here is another bombshell. US pension funds have started considering adding crypto to their portfolios. Total volume, $9 trillion. If even 1% goes into crypto, that's $90 billion. If 5%, $450 billion. Even through OTC markets, this massive new liquidity. Now that we see this new balance of power, Here are 3 essential strategies for success in this new reality. First, forget leverage. With decoupling, volatility is completely unpredictable. Bitcoin can jump 10% in a day, Ethereum 20%, and alts 40% in either direction. Leverage in such conditions equals absolute suicide. Even modest 2 times leverage during a 50% move against you will completely wipe out your capital. I'm not even talking about beginners. Experienced traders are getting margin called left and right. Simple rule: if you're not ready to lose everything, trade spot only. Not times 3, times 5, times 10, just spot, okay? Second, a new portfolio balance. Before things were simple, Bitcoin correlated with stocks. Now decoupling changed everything. Here is the new portfolio approach. 50% Bitcoin, the new safe haven. 30% 2 to 3 selected alts with strong fundamentals like Ethereum and Solana. 20% stablecoins for flexibility. But it's critically important to understand, only alts with real fundamentals and institutional interest will stand out. Not all will perform, only those prepared for institutional capital. ATH, Solana, possibly Ripple and Stellar, all aligned with ISO 20022. And the third strategy: follow the flow of liquidity. Now liquidity flows in a completely different pattern. First, Bitcoin, regardless of stocks, then strong alts with technological breakouts, then the rest of the market. You need to track these 4 key factors: institutional buying, April record $9 billion, ETF inflows, still positive, technical updates in alts like Spectra, and Bitcoin dominance, 63%. This is not temporary. Based on my data and M2 money supply analysis, Bitcoin flows with a 2-month lag. A short-term dip or consolidation is possible, likely through the weekend, maximum until Tuesday. Key entry zones for Bitcoin: $98,000, $92,000, and for Ethereum $2270 and $2050. For Solana, there was a good chance at $100. Now it's not the best, but also not the worst time to enter. 2025 is the year of reckoning. A foundation for major movements is being laid right now, and this time it's not just hype, but the construction of a new financial system with crypto at its core. And remember, crypto isn't just another investment trend, it's undoubtedly our future. The earlier you start learning, the sooner you will gain experience and monetize your success. I'm here to help you, so subscribe to my channel and turn on all notifications right now. This was SavaQ. Bye.